Welcome everyone, and thank you so much for joining us today. My name is Courtney Gardner, Partner Marketing Coordinator here at Perficient, and I'm excited to be moderating today's webinar, EPM Migrations, an Opportunity for Corporate Treasury. Time permitting, we'll have a Q&A session at the end of the event, so please type your questions into the Q&A tab located to the right of your screen, and feel free to do so at any time. Two questions often come up with our online events. Can I get a copy of the slides and a link to the recording? The answer to both questions is yes. We will email you with information on how to access both the slides and the recording following today's event. Without further delay, I'd like to hand it over to Shelley Ives.
Welcome to our webinar. Kirsten and I are excited to be here to share our experiences. Kirsten represents the Kyriba Treasury Management vendor side of our partnership, and I represent the Perficient Professional Services implementation side of that relationship. I have 29 years experience in the Treasury footprint with 24 years of experience in ERP implementation. I have been with Perficient for 6 years, and I'm currently bridging our Oracle practice and our Kyriba practice as the Treasury practice lead. Now I'd like to give Kirsten a moment to introduce herself.
Good morning, good afternoon, everyone. My name is Kirsten Lemke, and I've spent more than 30 years working with companies as they transition from manual to automated processes. I've been with Kyriba for more than 18 months, advising organizations on how to manage their global payments, optimize their bank connections, and prevent fraud.
In today's webinar, we're going to start by telling you a little bit about Perficient's professional service practices, about Kyriba as a treasury management tool as well. We're going to focus on the advantages of treasury involvement in an ERP. We will identify the areas of the ERP project that treasury can impact, how those areas can be optimized, talk about the benefits of an ERP and treasury management solution integration, and discuss the complexity of banking connectivity, advantages of a payment hub, and fraud solutions. We will even talk about the key learnings from client ERP projects. So Perficient is a publicly traded consultancy that was founded in 1997 and now employs over 5,000 colleagues spanning 35 global locations. Our business is comprised of dedicated solution practices with major tech vendor alliance partners like Oracle, OneStream, Kyriba, IBM, Red Hat, Adobe, to name a few. Perficient achieved $612 million in revenue in 2020, but the biggest takeaway that I want to leave you with from this slide is our 90% repeat business rate across our practice portfolio. Our aim is to create clients for life. Perficient delivers strategic implementations for on-prem, cloud, and hybrid project solutions tailored to fit our clients' unique needs. We specialize in faster time to value solutions delivered from our highly experienced and credentialed consultants who have tallied more than 3,000 deployments across our spectrum of solutions. Perficient services many specialized industries like healthcare, manufacturing, oil and gas, financial services, just to name a few.
Kyriba has been a multi-tenant SaaS solution for more than 20 years. We are the world's largest provider of bank connectivity, cash, and payment solutions used by more than 2,500 countries located in more than 100 countries. Our more than 800 employees support our more than 65,000 users who access our treasury, payments, working capital, and risk management solutions. As a privately held company, we're valued at roughly $1.3 billion and are used by about 30% of the Fortune 500. If your company is considering an ERP migration, we recommend that you get involved. Shelley and I have seen ERP projects that have gone well as those that have struggled. In our experience, those ERP projects where Treasury is involved are likely to go much better when you're not involved. It's common knowledge that ERP projects take a long time. It doesn't matter if you're implementing a brand new ERP, upgrading to a new version, or migrating to the cloud. ERP projects are expensive, complicated, and very resource intensive. Unfortunately, while they impact Treasury, Treasury is often one of the last departments to get involved. I've worked on a number of projects where implementation date has been identified, and yet they haven't even started talking to banks about the change. In fact, we had a client at Kyriba who approached us last October for an Oracle Cloud implementation that they had going live in April that just passed. This client had 12 banks, 45 entities, 12 currencies, and an Oracle Cloud implementation team, it wasn't Perficient, who had no idea how to deal with the bank formats. Fortunately, Kyriba has a unique methodology that allowed us to get the customer's banks connected and their ERP project launched on schedule. An ERP project means building new bank connections between the ERP and the bank. So it's a really good time to think about whether you need to rationalize these bank relationships. As you'll learn later, the average time for a bank format implementation is roughly 3 to 6 months, and a typical bank has normally 3 to 4 formats that you need. Kyriba's solution allows banks to be connected in as few as 12 hours per format. Getting involved early gives you an opportunity to be strategic in your bank relationships. It allows you to save money and to potentially implement a treasury management solution or a payment hub that can also provide additional benefits. Keep in mind that if your organization's ERP project is already in flight, it's never too late to get Treasury involved. Shelley, can you talk a little bit about the modules that will require Treasury consideration when implementing or upgrading an ERP?
Sure, Kirsten. So ERP modules that typically benefit from Treasury insight are cash management, accounts payable, accounts receivable, and we're going to mention connectivity as if it were a module. The cash management module is primarily where a majority of Treasury-related functions reside. This module is where daily bank statement reconciliations are executed, daily cash positions are determined, and short-term and longer-term cash forecasting is derived. There are a select few ERPs that bundle a Treasury solution with their cash management module, but for the most part, the solution is simplistic and is not able to satisfy complex requirements effectively. In accounts payable, the Treasury Department's banking relationships are integral to ensure secure outgoing payment processing. But more than that, the Treasury Department, as well as other departments, must be sensitive to potential fraud risks in terms of these outgoing payment formats. In accounts payable, the Treasury Department's banking relationship is relevant in terms of how incoming cash is processed between the bank and the ERP. Saving the best for last is connectivity between your ERP and your banks. This is not actually a module, but one of the most overlooked and undervalued components of an ERP project. How is your entity going to connect to your bank or banks? How many banking relationships do you have? How many accounts per bank? Are these global relationships? What formats are required by each bank for each of your payment types per account? What protocols will you need to use to communicate with each bank? This is just the beginning of the questions that will need to be assessed, and typically this is not a discussion that occurs early in the process, but should. Some implementers do not discuss bank connectivity with their clients because they do not possess experienced resources with mature connectivity skill sets. During your implementation partner selection process, ensure that this topic is raised. What specific Treasury function should be considered when planning ERP project requirements? In the previous slide, we mentioned connectivity in terms of the importance of a module. Think of this as a way you will communicate between your ERP and your banks. This is essential to plan, and in terms of Treasury functions, may be one of the most important considerations. Flexibility is imperative while minimizing the customization of your integrations. Next, consider both your incoming and outgoing bank-related files. When we are talking about incoming files, we are referring to bank statement, prior day, and intraday files. lockbox and EDI receipt files containing receipts and remittances, and various payment acknowledgement files, which are lesser known and considered incoming files that give feedback along the payment lifecycle. Your organization's outgoing files are comprised of payment files in multiple formats that a business might use, like wires, ACHs, third-party checks, drafts, and positive pay files, etc. Each of these different types of files may have their own formatting flavors by bank that need to be understood before they can be consumed by your ERP. When we speak about Treasury type reconciliations, we are talking first about the daily bank statement lines to subledger transactions like payments from payables or receipts from receivables, plus those recurring Treasury transactions that are not tied to a subledger transaction that can be matched and accounted as cash movements in your general ledger via rules that can be set up in your ERP. Your daily bank statement reconciliation should be automated. That can be done in either your ERP or your treasury management solution. The second type of treasury-related reconciliations that you may be involved in is a monthly bank-to-book reconciliation, where your ending balance for the period is equivalent to the ending balance of the account designated as the cash account for that particular bank account. Another consideration when planning ERP requirements is how you get your daily cash position. Most ERPs can handle a simplified version of this function. However, if your business is retrieving more complex components for consideration in your daily cash position, you may need to enhance this functionality with a treasury management solution. Along the same lines as your daily cash position, the data required for cash forecasting is not typically imported in an automated fashion into the ERP. Also, what you may need for more complex cash forecasting calculations or trending may not be readily stored and available in your ERP. Additionally, you can keep in mind that this functionality can be enhanced by a treasury management system like Kyriba. In regard to payments, even though the responsibility for managing payments is not typically a treasury function, the banking relationship and fraud prevention is. Therefore, the Treasury Department should be actively involved in the ERP requirements planning for payments. And just like ERP payments, even though the responsibility for managing cash application is not typically a treasury function, the banking relationship and cash flow forecasting is. And again, the Treasury Department should be actively involved in the ERP planning for remittances and receipts. Finally, again, based on the Treasury Department being the primary contact for the banking relationships, they should plan on taking an active involvement in integration testing for each phase of the ERP project. This includes managing timings for testing and deadlines to work in congruence with project timelines. With some setup and possible integration development, your ERP can be set up to connect directly to your banks. This will involve IT resource time and expense, but you should know that you have additional options. If you utilize a treasury management system in conjunction with your ERP for your bank statement automation, your connection can be set up directly between the treasury management system vendor and your banks. But what benefits does that get you? There is also not a need for those costly IT resources within your organization to set up new banking connections, monitor daily reporting, or troubleshoot delayed or missed files. Treasury management system vendors like Kyriba will proactively manage your bank connection issues, supporting daily reporting, allowing you to get notification of any bank reporting delays and resolution management. Treasury management systems can be bank agnostic, allowing you to modify your banking relationships at will without costly new connectivity integration development. New bank account setups will be as easy as plug and play, and this is especially useful in conjunction with acquisitions. A treasury management solution can provide you with real-time visibility of global cash on one platform, which is especially important if you have multiple ERPs and/or complex global banking relationships. At this point, we're going to transition to connectivity and payments. Traditional connectivity involves connecting your source systems on the left directly with the banks on the right. These connections are completed separately. As your company grows, your banking relationships often become more complex. For the source systems, you may have one ERP or one ERP with multiple instances or multiple ERPs. One of my clients had 100 ERPs because they had grown through acquisition. Banking landscapes can be extremely complex, with some companies having dozens or hundreds of banking relationships globally. The more source systems and banks, the more complex and time-consuming the bank connectivity can be for your ERP project. Kirsten, did you want to speak to the payment complexity and enterprise connectivity?
Sure. So a payment hub typically sits in the middle of of the ERPs that are on the left-hand side and the banks that are on the right-hand side. It takes the data from the various sources and loads it into a single platform and then sends the payments onto the banks in the appropriate formats. A payment hub ingests the data in varying formats from a variety of source systems. It also provides for additional approval processes that can enforce consistency across the enterprise. This works well when you have small geographic teams that don't have enough people to provide segregation of duties, or if your hub can be used for final approvals, allowing for oversight and consistency across all ERPs. If your ERP migration is in the future, then implementing a payment hub now allows you to establish your bank connectivity prior to a cloud migration. This reduces your risk and shortens the timelines when you come to your ERP migration project. And the focus can then be on the ERP connections on the left-hand side of this diagram, since the bank connections would have already been put in place. Format transformation is used for payments that are not already pre-formatted by the ERP. The payment hub reformats the payments based on specific criteria, such as bank channel, payment type, and receiving location. According to a 2021 AFP study, fraud has increased dramatically since COVID, with 74% of companies either experiencing fraud or experiencing attempted fraud. As a result, it's essential that a payment hub screens all payments in real time against a digitized version of the payment policy. This screening should include rules-based detection as well as machine learning to identify potential fraud. Implementing a fraud tool as part of the hub allows you to proactively identify and research potential fraud before sending a transaction on to the bank. In addition, creating the file and sending it directly to the bank eliminates the chance of fraud with manual entry. Bank connectivity is a critical component of this payment hub functionality. Integrated end-to-end bank connectivity is necessary to centralize payments and can optimize cost and scalability while maintaining automation and security. The bank transaction should flow both ways, allowing the source systems to be updated with the appropriate transactional data. The banks can electronically acknowledge receipt of the files, and the acknowledgements can be sent back to your ERPs. As we transition to the next slide, we're going to talk a little bit about the various types of fraud. So fraudsters are using technology to access your organizations. So using technology to identify and prevent fraud is a natural response. Every payment fraud prevention solution should include a few components. Sanction screening is something that many organizations will talk about as their fraud solution. At Kyriba, we view it more as a compliance issue, not as much as a fraud component, but I'm mentioning it because many other organizations look at that as being key to their fraud solution. In addition, detection rules and machine learning. There are screening tools available that allow you to complete either positive or negative confirmations. Technology can be identified that individuals you're working with are really legitimate. Products are available for loan companies and others to look up business EIN or personal social security numbers to confirm that a company or individuals who are applying for the loans are in fact who they are purporting to be. There are services that confirm the entity that owns the bank account number to allow for the confirmation prior to a payment being sent. Well, banks are required to send all payments through a sanction screening process to identify payments going to unauthorized entities. You have the option to utilize sanction screening internally to identify potential issues before the file ever even gets to the bank. Stopping the sanctioned payment prior to sending it to the bank saves you time, energy, and money. If the bank identifies the sanction item, then there's a lot of work. Your money is frozen. There's subsequent research and reporting processes that you have to go through, and you may even have to pay fines. As you evaluate solutions, ask if sanction screening is offered and then ensure that the provider is using the most up-to-date lists. As I mentioned, some of the players in the industry only advertise fraud, but they really are only offering sanction screening. At Kyriba, we view sanction screening as a compliance issue. Any technology solution you implement should provide for real-time fraud detection and an opportunity to stop any payment before it leaves your organization. I'm aware that there are some systems on the market that identify a fraudulent item and then, but it happens after it's already at the bank. So it's a good idea to clarify specifics on how and when you're notified of a potentially fraudulent item. Traditionally, organizations have focused on rules-based systems to detect fraud. Rules-based systems employ if-then logic that can be really thorough at uncovering known patterns of fraud. Rules remain an important fraud-fighting tool, especially in combination with advanced approaches. However, they are limited to recognizing patterns you already know and can program into that logic. You should have the ability to select the rules that you'd like to use to identify potential fraud. Things like duplicate payments, first time a payment is made to a specific account, payment to a country where you're not currently doing business, modification of a payment field, those types of things.
Kirsten, do you think these defined rules would have prevented the $18 million fraud loss at that financial services company?
Absolutely, Shelley. For those not familiar with the situation, a financial services organization lost $18 million over 8 days, not 18 days, 8 days, due to a business email compromise scam. The finance director in Asia received an email from what looked to be the CFO requesting that money for an acquisition be moved to a new bank in a country where they weren't currently doing business. A rules engine would have flagged the payment for both a new bank as well as for a country they didn't operate in. In addition, a rules engine would have reinforced not having the appropriate approvals and flagged the dollar amount and frequency of payments to the same vendor. The fraud was discovered when the account that was being used ran out of money, and the financial director in Asia called the CFO to ask which account to pull the remainder of the money. When they contacted us, we shared that 4 of our flags would have been tripped in the system to identify fraud if they had had a fraud solution in place. They now are using Kyriba's fraud tool and have been identifying other potentially fraudulent items. As we transition from rules detection to machine learning, it's another fraud prevention tool which automates the extraction of known and unknown patterns from the data. Once it recognizes patterns, it can also apply what it knows to new and unseen data. The machine learns and adapts as new outcomes and new patterns are presented to it via a feedback loop. As you investigate fraud solutions, look for a solution that includes customized scoring, centralized alerts, complete resolution workflow management, and data visualization through drill-down KPI dashboards. All of those are available at Kyriba. Also considers separation of duties between the payment initiator, the payment approver, and the reviewer of a detected payment. The ability to hide alerts from initiators and approvers of the detected payment is really important so that specific users don't know whether or not their payments are triggering an alert. This will help you identify if you have any internal fraud, which historically is about 20% of the fraudulent items that a company experiences. Scenario-based determination for stopping payments is also beneficial. And finally, audit trails with ongoing and historical reporting are necessary as you investigate potential fraud. Fraud detection is a challenging problem, and while fraudulent transactions represent a very small focus of activity within an organization, a small percentage of activity can quickly turn into big dollar losses without the right tools and systems in place. With the advances in machine learning, systems can learn, adapt, and uncover emerging patterns for preventing fraud, so you can keep up with the fraudsters even if they change their tactics. Kyriba's fraud solution provides you with alternatives on how to deal with a potentially fraudulent transaction, such as creating an alert but letting the payment continue as planned, or stopping the potentially fraudulent transaction and letting the rest of the batch be transmitted to the bank. Many banks are offering fraud solutions, but they only look at those transactions that are routed through that particular bank. Best practice is a fraud prevention solution that manages all of your transactions. Once you decide on a solution, you should be able to implement the solution quickly. Standing up a fraud system should take you days or weeks, not months or years. Shelley, as we move on from fraud, can you share a little of your experience with the development and testing process and the ERP implementation?
Sure, Kirsten. Let's start with how can your organization's treasury functions be optimized in an ERP project? Sure, most systems can handle basic treasury functions, but how can you maximize their effectiveness? I'm going to briefly touch upon some enhancement opportunities, and we will detail the specific scenarios and benefits in subsequent slides. The automation of bank statement import and reconciliation is a low-hanging fruit in an ERP project. Using connectivity between your ERP and the bank to automate daily prior day files for all banks, allowing the ERP to reconcile bank statement lines to outstanding subledger transactions allows this basic function to complete during off business hours so that analysis of cash position can begin upon the Treasury team's start of their day. Additionally, your organization might consider adding a treasury management system if ERP functionality is not sufficient to meet the complexity of your treasury functions without significant customization. Most ERP systems handle AP payments well after an initial implementation with significant development costs and time for file integrations. But if you would like to maintain the flexibility to add additional payment types or sources, you may want to consider utilizing a payment factory. Finally, all businesses should consider taking this project opportunity to enhance their protections against fraud risk. Let's look at the detailed benefit of bank statement automation solely within an ERP. The automation of the import and reconciliation process of your prior day and intraday bank statements into your ERP only still frees up your treasury resources for value-added work. I had clients who used to spend hours every morning downloading files from the various banking portals. Bank statement automation will also align your cash posting with your payment processes. And what I mean by this is that your organization recognizes your cash movements at the same time as keeping track of your payment transaction clearings in the ERP using the automated reconciliation. This hands-off automation will help your organization escape the Excel trap and minimize opportunities for error, providing an enhanced centralized control environment. According to Dr. Penko at the University of Hawaii, 80% of all spreadsheets contain errors. And for those of you who still utilize spreadsheets for your liquidity consolidations and cash forecasting, that's something to consider. So just like there are benefits in automating bank account management with an ERP system, there are additional benefits in further integrating a treasury management solution for enhancements and further benefits to enhancing your ERP payment experience with Payment Factory or Payment Hub, utilizing additional fraud protections. As stated in the previous slide, in conjunction with bank statement automation and integration, utilizing a treasury management solution that includes a predefined connectivity and payment factory can help eliminate having to utilize constrained internal IT resources. Your project will not have to wait in line when you want to create new banking connections or add payment formats. This will help you get into the testing phase with your bank quicker by eliminating costly format and connectivity development in terms of both time and expense. So let's talk about that development. During an ERP project, coordination of the development and testing phases is imperative to meet your project milestones and go live dates. Imagine the frustration that your time and business overall would have if you successfully complete your UAT testing of your treasury functions with the bank, only to find out that the banks that you do business with not only were not able to put your files and processes into their production environment until after your planned go live, or that they forget to promote the solution that you tested in UAT into their production environment. Personally, I've seen both of these scenarios happen at a go live. As a treasury group planning the requirements development and testing plan for your business's ERP project, you should understand and document your banking landscape. How and with whom do you work in your banking relationships? Where are your depository and disbursement accounts? What is your account structure? Do you utilize ZBA or sweep accounts? How do you account for these in your general ledger? Prepare a complete listing of all your accounts that you will be maintaining in your ERP or treasury management solution. Keep in mind that each bank connection will need to be rebuilt for each ERP implementation, upgrade, or banking relationship change. Additionally, all payment templates must be individually developed and tested with each bank. This is where adding an ERP and bank agnostic treasury management solution with a payment template library can save your organization time and expense. Testing with your bank's technical teams is time consuming and may not adhere to your entity's testing schedule, especially if you're a global entity and your bank relationship operates in a different time zone. It is also typical that you will need multiple testing cycles with your bank. You'll need to confirm testing plans with your bank multiple times, and this is not nimble. Getting to the right people, the implementation people, requires significant coordination. You don't get much of their attention, at least not necessarily when you want it. They may not meet your timeline. Getting incoming files to test with may also prove difficult. Even if a file is provided, you won't have the test data in your system for full cycle testing. What I mean by this is that payment data in your test system will not match your test file provided or a production bank file that may be provided. There may be differences in the formats between your test file and the payment types by bank. The average testing timeline from development to ERP production is 3 to 6 months per bank, with an average of 3 to 4 payment templates per bank as well. A quality payment factory in your treasury management solution can eliminate the need for you to keep calling your IT group to update and test the banking formats and connectivity during a relationship change or ERP project. So what are some of the key features of a quality payment factory? First, as mentioned previously, Kyriba offers a robust library of shelf-prepared shared payment formats. The concept is the payment file is sent from the ERP system in one format, like a CSV file, and upon arriving at the Treasury Management System, it is interpreted and transformed into an approved format for consumption by the associated bank. Kyriba's library of 48,000 payment formats is shared across the Treasury Management Solution vendor's platform. The client does not have to have access to the direct access to the format, nor do they need to. There are no IT resources required. Kyriba manages all communications and testing of new formats or changes in formats with the banks directly. And Kyriba is apprised of and responsible for the ongoing maintenance of all of these formats. And yes, changes in formats happen all the time. I had one client find out that they had been routinely charged for over 20 months for the bank to modify or quote unquote fix the format of their files upon receipt by the bank. Based on their file volume to the bank, this resulted in thousands of extra dollars charged in bank fees per year. The client didn't know because the files were ultimately being processed. As a side note, the client discovered this buried fee with another tool provided by their Kyriba platform called Bank Fee Analysis. So what improvements can you expect following an ERP project? And especially by taking the opportunity to integrate Kyriba to enhance your ERP experience. First is the cost savings in terms of the time provided by automation. Bundled with a treasury management solution with payment formats and flexible connectivity, you will save time and development expense by jumping straight into testing with your bank. Keep in mind that each banking format can cost you 3 to 4 weeks of development time and resource expense, plus an additional 6 to 8 weeks of testing time and resource expense prior to implementation with your financial institution. Also note, each system that connects with the bank incurs additional bank service fees, software costs, and in the case of on-premise solutions, significant IT resources. Protocol flexibility allows some organizations to even manage duplicate payment channels, such as multiple SWIFT channels. By consolidating your communication to your banks and centralizing your treasury responsibility, you will again realize an opportunity for savings for your organization. And further, bear in mind that implementing Kyriba gives your organization visibility into diverse liquid assets at a glance globally. Centralizing all payments via a payment hub allows complete visibility of all outgoing cash flows so that Treasury can optimize cash balances and make effective decisions pertaining to cash and liquidity. The hub allows the organization to run leaner, minimizing excess balances so that cash can be more efficiently deployed where it's needed most. When multiple systems are used to manage payment workflows from request, initiation, approval, and transmission, the risk of mistakes and unauthorized payments increases. A payments hub centralizes payments prior to the final transmission to the bank, and the CFO can ensure that all payments are the responsibility of a single team, regardless of amount, location, or who requested it. If you choose to process your payments through Kyriba, you can maximize fraud prevention through machine learning and ensuring there are no changes from your ERP-generated file. All outgoing payments should be screened in real time against external sanction lists such as OFAC, and a digitized payment policy should be put in place to ensure that only authorized payments are approved and released to the bank. Any suspicious payment should be embargoed for further review with a full resolution workflow. Finally, when utilizing a treasury management system vendor with payment hub capabilities, dependence on internal IT resources are no longer needed to build and maintain bank relationships and payment formats. This gives finance teams the freedom to change existing banking relationships, enables scalability to add new banks, and gives teams the flexibility to update bank formats, including harmonization to ISO formats. Okay, now that you all know the expected upside, what are the pitfalls during an ERP project and how can you avoid them? One of the biggest misses in not having the Treasury Department, who typically owns the banking relationships involved early in the planning of ERP requirements, is missing key requirements based on how your banks report via their inbound files or the field requirements noted in the bank's formatting specifications for outbound files. This is important for building the mapping rules that allow batches of payments to reconcile against a group of individual payables transactions. The same general concept could be set up for depository receipts as well. Additionally, the population of required fields holding data necessary for international payments has also been missed historically. Decisions made during ERP planning, most often centering around payables, without consideration to vital banking information, typically results in misses of data in required fields. I recently heard a story from a client that had just gone live on a cloud ERP system. They could not send international electronic payments for the first 10 business days because the data required for those international payment files did not meet banking specs. That was a missed requirement. And due to testing not being outlined in advance, they never tested these specific scenarios of these international wires. As a Treasury department, if you have only dealt with your banking relationship manager, take this early opportunity to reach out to them and request an introduction to their technical team project manager. Initial communication should lay the groundwork for expected working relationships, expectations from both sides to understand the testing, the timing required for each phase of the project and milestones, and to also obtain specifications early in the process to ensure the storage of your ERP and all data required for transactional processing. These steps will minimize the occurrence of unmet expectations and missed deadlines. An example that I have of a missed milestone was a client that was having their bank create a custom BAI file that listed batched ACH payments separately for the ease of their ERP reconciliation. This bank, which was a new relationship for the client, made two critical mistakes. First, UAT testing went fairly well, with only minor slippage in the development deadlines for the custom file. However, the bank failed to even put the standard prior day file into their production environment. The client had to take their daily cash activity from their test environment for 3 full business days until the bank could promote even the standard file to their production environment. Then the custom file was delayed and not quote unquote able to be promoted to the production environment until 2 weeks after testing sign off. All in all, this project was not complete until 6 weeks after the planned go-live date. And the moral of this story is mitigate risks where you can. So, as a Treasury professional, what can you do to ensure your team's involvement in the organization's ERP project planning? The main point here is to get involved. Determine the ERP strategy for your Treasury team within your organization. Again, if you don't currently have full visibility into your organization's liquid assets on one platform, use the foundation of the ERP project to include this vision in your organization's ERP strategy. Be sure to promote the benefits that this could bring to the ERP experience, including the offset of cost savings in terms of banking flexibility and savings in terms of time and development expense against any additional costs that a treasury management system would bring to the ERP project as a whole. Use your preparation for your ERP project to rationalize your banking relationships. Do you have underutilized accounts? Can your structure be optimized? Document your banking structure completely, including directional cash flows between accounts. Be sure to further document your treasury processes. Ensure that they detail the accounts involved and associated accounting needed to be generated in an automated manner. Use your current treasury processes to frame your requirements for the ERP project. Have them ready early so that this will ensure your team's inclusion in the early ERP strategy planning. Set expectations within your organization for testing with the banks, including lead times, specification requirements, and ease of testing expectations. As a team, be open to a possible plan B. Be flexible in your solution. Understand the options available to you, as well as any possible additional cost mitigations. Be ready to solution to achieve the data and processes that you need to meet your team's requirements. Finally, see any ERP project as an opportunity to fund or invest in mature treasury management system functionality, including a potential payment hub, incorporating a treasury management solution or payment hub with your ERP project can reduce the cost, time, and risk to implement. Wouldn't it be nice to go into an ERP project go live with a reduced risk as to whether you can connect to your banks for valuable information or make all types of payments at go live without issue?
Those are great suggestions, Shelley. Thanks so much. Well, during our session today, we talked about the areas you can impact and the benefits if you get involved. We covered the advantages of outsourcing bank connectivity, payments, and fraud, and we gave you some ideas and examples of the improvements you could expect and the pitfalls to avoid. Let's open the session up for questions.
All right, thank you, Kirsten. As a reminder, we're going to open up the session to any questions that have come in today via chat. Again, if you haven't had time to ask your question yet, please type them into the Q&A window at this time. So I'll go ahead and ask the first question here. In your experience, what is the average length of time to set up a bank?
I'll take that one, Kirsten.
Okay.
So in the past year, I've had a very simple bank setup for at least one account that took 6 weeks with a BAI2 file and a check format with a positive pay file. I also had another one that took 5.5 months for one account that had a custom BAI2 file with 4 payment formats and a positive pay file. I also had one customer that was migrating to the cloud where we set up 3 new payment formats and connectivity for testing in 6 weeks. That was not an end-to-end project setup timeline because this last project that I'm referring to is still not live because the scope of the rest of the ERP project was not ready to go, but the payables portion was set up at that point just in 6 weeks and tested.
So Shelley, of those, which of those were using Kyriba's library, or were all of them?
Not all of them. The 5.5 months was definitely ERP only. Those projects are just far more complicated when you have to have somebody doing the development. What we found out when we have different resources doing the development of payment files is that even though you may be dealing with the same bank, sometimes based on the requirements of the format, so say if it's a cross-border wire or a domestic wire, there's different flavors to those formats, and that's not something that if you're ERP only that the developers pick up on. Now with Kyriba, all of those different flavors of those payment formats are already there, and so that automatically streamlines the implementations down into the 6-week window versus the 5.5-month window. Does that help explain?
It does. Yeah,
Okay.
thanks, Shelley.
Got another one for us,
Perfect. Thank you
Courtney?
both. Yeah. Someone asked, is fraud detection included in payments module?
So I can answer that. The answer is no. Kyriba is modular, so you can pick and choose the components that you want. We have a separate fraud module that bolts onto our payments module.
Okay, perfect. And can we add a TMS after our ERP project is complete?
Absolutely. Yeah. I'll jump on that one. The reason that we bring up the treasury management solution in this context is so that as a treasury team, you understand that you have options during your ERP project. It allows you to bypass those costly developments and go straight into testing with the banks. If you're an organization that wants to maintain flexibility for adding banks, bank accounts, connectivity, different ERPs for acquisition projects, or even just be nimble enough to migrate a banking relationship at will, this is definitely something that should be considered even after your ERP project is complete. Additionally, it's the fraud protections that cause some organizations to move their payment files to a payment factory or payment hub after an initial ERP implementation.
Next question. In a scenario where we have both ERP and Kyriba, but we've not implemented BankCom with both, where do we start, from the TMS or ERP?
Can you repeat that one? There was something in the middle that I didn't catch.
Yeah, of course. In a scenario where we have both ERP and Kyriba, but we've not implemented BankCom with both, where do we start, from the TMS or ERP?
Okay, so BankCom, is that bank connectivity? Is it like COM, C-O-M, or CON, C-O-N?
Possibly. Yeah, they spelled it
Okay.
C-O-M-M.
Okay, so banking communications. So it sounds like they're doing things manually. They've got Kyriba, they've got an ERP. They just haven't hooked them up to. Obviously, Kyriba's got to be hooked up to talk to the banks, but they haven't hooked up the ERP to speak to Kyriba. What we'd have to do is understand what their primary goal would be. I mean, if it's cash forecasting, especially advanced cash forecasting, that's where you really need, and even the automation of the payment files would be good reasons to do that. It's a connectivity project, if you will. It's not necessarily that you start with the ERP or you start with Kyriba. You start with the connectivity, and we have a fantastic resource here in-house at Perficient who specializes in connectivity. Give us a call.
Perfect. Thanks, Shelley. It looks like we have time for maybe 2 more questions. Next one, if we added TMS during our ERP project, how does it impact delivery and rollout?
I'll grab that one, Kirsten.
Okay.
So if you add a treasury management solution during your ERP project, you can cut out the development costs and time for the connectivity to your ERP and banks. What I mean by that is that it's got to happen anyway. If you're automating the full solution and joining that for automation, it's going to happen anyway. So instead of you paying for the development and that taking longer through your ERP resources, if you put Kyriba in the middle, then obviously you've got the connectivity being built at that time through the flexible solutions that Kyriba provides, and you're streamlining with the fact that they've already got the connectivity solutions, they've already got the payment formats. You're getting to test with the banks a lot faster, and instead of a cost and a time factor, which is already included in your ERP, being a factor, you're replacing that, and you're getting far more value add through the additional add on to the project with the TMS.
Perfect. All right. It looks like this is our last question. Oh, Kirsten, did you have something to add?
No, go ahead. It's all right, Courtney. Go ahead.
Oh, perfect. Okay. So last question, is the fraud detection or prevention tool part of the TMS or the ERP system?
It's part of the Treasury management system, and it's a bolt-on. And what's nice, especially if you have multiple ERPs, is that then you just have one fraud solution that everything has to go through.
Perfect. All right. Well, thank you both. We'll now close the Q&A portion of today's event. Since we're getting close to the top of the hour, if we were unable to get to any of your questions, we'll get with you shortly after today's event. I encourage you all to follow Perficient's team online as we have new posts added weekly. You can visit perficient.com and click on the Insights tab for our blogs, white papers, and upcoming webinars. As a reminder, there will be an email sent to you with a link after today's event, also including the slides, so you can review today's session again or share it with others. Thank you again to our speakers and to you all for joining us on today's call. We hope to see you all again online in the future.